Greetings, happy new year to everyone out there. Hopefully you had a very happy holiday season with friends, family, loved ones, football, whatever. As we head into a new year, a lot to discuss here, but we will make it pretty concise. Starting off, obviously, we had a great year last year where we saw growth outperform value. After value certainly held up better during the bear market of 2022. So things are starting to normalize between those two, getting back to where they were actually pre-2022 valuation-wise versus each other. At the Magnificent Seven, obviously, in the tech sector, certainly a strong builder of value in the markets. And the S&P 500, for example, they account for now 30% of the S&P 500. Interesting to watch. The PE ratio, price to earnings of the equal weight S&P 500, which just makes all companies equal, does not overweight the Magnificent Seven. It's about 17.5%, so not too overvalued there. As the equal weight average there looks pretty fair. Earnings growth prospects still pretty attractive going into 2024, 7 to 9% average across the market, so not too bad. Now, another thing, as we had the Fed pivot, from more hawkish, especially mid-year, right through the late October, and then that handoff of the baton where they became a little bit more dovish and portended perhaps some more dovish activity this year. In early November, the market up double digits, generally more than 10% for November and December, leads to, or it has every other time, a double-digit gain for the following year. Now, we do have some headwinds. As the market, as usual, both sides overdoes it, a little bit to the upside. The Fed, on average, we're looking at 2 to 3 rate cuts this year is what the consensus is. The market has priced in maybe 6 to 7. So again, if things don't play out perfectly, the question is will we digest some of these gains? And speaking of where we are now in January already, right? Flip that calendar page, crazy, right? How it changes. January is a pretty good, what they call the January effect month. Is pretty solid on its percentages. I mean, 72% of the time how January goes, the year is gone. And then according to Stock Almanac, first 5 trading days. Right, today ain't starting out too good, pardon my English. We'll see how it finishes. First 5 trading days, if it's positive for those first 5 days, 82% projection on positivity for the year. Not off to a good lead. Leadoff hitter struck out so far. We're deep in the red. Now, digesting a lot of last year after, again, a hyperbolic move, if you will, for the last 2 months. Not to be unexpected, but these are the things that we are looking at. And the good news for the market is, though, is when you take interest rates and inflation out of the equation, which it seems, at least at this point, that we have, generally earnings will drive, right? That will be the horsepower that drives the market either up or down based upon that. We already went what we thought what we saw as the projected earnings growth across the market is. So with that being said, a lot to really digest. Take in January, it's like a first quarter of a football game, for those of you fans out there. Can play a big factor. Now, we go in now from a pre-election to an election year. Generally, again, we see some digesting before strength, as we move through the year as well. So a lot of different conflicting factors in there. One thing I'm watching as well is the dollar's been bouncing, versus the euro, the pound, the yen, the Canadian dollar, et cetera. So again, providing some stress there as well. Now, as we look across sectors, obviously, last year, large cap growth was the leader, right? Specifically, technologies, consumer discretionaries, and as such, where the consumer staples were getting hit hard. Again, with higher rates and essentially, especially mid-year and as such, that is a strain on also small caps. But then at the end of the year, small caps really bounced out of the gym. Why? Because again, when the Fed pivoted, that helps out a lot of these companies with a lot of debt on their balance sheets. The question now is that, we look at small caps in an interesting juxtaposition as well at this stage. All that's to say is we're still in the soup of it. Not so much clarity, but these next few days as we roll through January will at least give us a little bit of a, crystal ball into what we may see for 2024. I'm sure there'll be a lot of surprises out there. We'll be here for you, again, staying eternally vigilant. Again, started the first inning here. Not that great, not unexpected. After a large move. But again, the good news is generally big November, December bounces lead to a pretty good year the following year. The last case was 2020, and you saw 2021 was pretty attractive. Till next time, stay warm. Happy New Year. Keep those resolutions at least least, keep going to the gym at least to mid-February. You'll beat out 99% of the folks that sign up, never show up back on their phone, think they're working out. Take it easy.